Hi everyone, welcome to my YouTube channel. So in today's video, we will going to discuss about Hindenburg's report on Adani Group. Hindenburg is a company that has levied a bunch of allegations on Adani Group. They have called them stock manipulators. They have increased the valuation, created a bunch of shell companies and whatnot. These allegations are very serious, and if the issue spirals out, if the allegations are true, then it may create a massive pain for Indian stock investors, including me. In this video, I am going to take you through some important points that have been discussed in the entire report with proof, and will be asking you to be rational throughout the video. So let's kickstart our discussion. So let's go point by point. There are 7 critical points that you need to understand. So the first point is, what exactly does Hindenburg do? What have they said? And what's the motive behind all this? Hindenburg is a research, investment and whistleblower organization, so as to say, all rolled into one. So what they basically do is, they do something known as short selling. Short selling in easy to understand term is, for example, let's say the stock price of a particular company is 100 rupees today, and for sure you know that the stock price of that company is going to fall to 60 rupees. So what is it that you will be doing in this scenario? So you will be selling the stock at 100 rupees today, and again when the stock price of that company fall to 60 rupees, at that time you will be able to purchase that stock. So in this scenario you will be able to make 40 rupees profit. So this is known as short selling. So now you will say that I'm not getting option to do this on Zerodha, or how is this done? So this is done in FNO, or futures and options market. You don't need to worry about the semantics of like I don't know how to use FNO and all. Will I be able to understand the concept? But you will be able to understand it. What you simply need to understand is that Hindenburg is very good in terms of short selling stocks. They pick up the candidates where they feel there are vulnerabilities. They analyze those companies, they do investigations on those companies, release reports, do some kind of whistleblowing, and finally they end up shorting those stocks and making crazy amount of money. So in this context, on January 23rd, 2023, they released a report called Adani Group, how the world's third richest man is pulling the largest con in corporate history. And they have released a very dense report with reference to a lot of articles, primary, secondary investigations. The resources and research seems legitimate. Now you will say that this is not correct, this is politically motivated, this company is wrong, they are against Adani, they are against India and all that stuff. But see, here on this topic I am not here to comment, but a couple of important points that you need to understand over here is that this company has done this to a lot of listed companies in the past, including Twitter, Tesla, Nikola, and have successfully short sold their stocks. This is the point number 1 that you should understand. Point number 2 is, there is no fire without smoke. Now there are thousands of listed companies, not in India but US as well. Why would they handpick Adani only? So there are counter arguments to both these things. But first let me very quickly show you what this organization Hindenburg has done in the past. Why are they going after Adani ji? So there are 2 things to this. First is, so from the year 2020 onwards, this company has shorted almost 30 stocks, including Tesla. This company has a good track record of shorting stocks, including some big names. There are 6 more points that I am going to discuss. Point number 2 that you need to remember is, Gautam Adani's wealth has built in the last 3 years. Yes, that is correct. And to what extent? Almost 85% of his wealth has grown in the last 3 years. It is after 2020 that his wealth has extrapolated or grown massively. Now just think about it. There is a recession going on, markets are not doing well, so many negative things are happening, markets are staying sideways. Still, how, like where all the companies are falling, how only Adani companies are rising? What is the reason behind that? Well, there is a stock market related answer to it that is mentioned in the Hindenburg report. So see, what Hindenburg report say is, total $120 billion of his wealth, from that $100 billion of wealth coming in the last 3 years, that is through meteoric appreciation of stock price. And the increase behind the stock price was because of debt fueled growth. What is exactly debt fueled growth? That is the amount of money you are borrowing from the market and reinvesting in your business, so that will reflect in your stock prices. So that is debt fueled growth. So that was also one of the reason mentioned in the report. Also the books are in public, so you can go and figure out how much debt the Adanis have. So just to give you the estimates of the financial health, there is an important ratio called current ratio. The formula of current ratio is current assets over current liabilities. What are assets? So assets are the things which are positive. Liabilities are the key obligations. So if the current ratio is 1, what does that mean? So if a person or a company will be easily able to manage the liabilities because it has equal number of assets. If the ratio is below 1, then it can create a lot of problems for the company. Because let's say in Adani Green's case, the current ratio is below 1, that is zero point 0.5. That means it will not be able to manage its liabilities. So that is a big problem. Now the worrying factor is out of 7 listed companies of Adani, 5 of the companies are having current ratio which is below 1. Another related point is in Adani Group companies, the promoters are pledging their stocks. So under 99.99% cases, the pledged promoter holding is not a healthy sign for a company. It just indicates that the company has taken a lot of debt. Now on top of this, they are releasing an FPO, follow-on public offer. Now comes the third point that Hindenburg is highlighted in the report. What basically they are saying is the company's management or the lot of company's management is involved in shady practices from their past. For instance, Rajesh Adani, who is currently the managing director of Adani Enterprises, he was jailed in a fraud case. This was never a good sign. He was involved in tax evasion. He was arrested at that time as well. Now you will say that someone must have filed the case on a personal vendetta. So I'm not a legal expert. I'll leave this up to you. The second case is of Samir Vohra, who is related to Mr. Gautam Adani, who was also involved in a diamond trading scam. Again, all this reference data has been given in the report. You can go and check in the report. So on top of this, several other members of Adani families are involved in all of this stuff. This is not a healthy sign. To cut the long story short, this is not a good corporate healthy practices where whole family is involved in the decision making of the company and no independent auditors are there. Now coming to the fourth point, the fourth point is related to float. Float of the company is very less. Let's understand what float is. Let's understand float with the example of Adani Enterprise. Say for example, promoters hold 73% of Adani Enterprise. That is Adani itself owns 73% of Adani Enterprise. So hypothetically 27% of the Adani shares that will be held by it will be held by public FIIs, DIIs. So the investors, the traders will trade into that 27% only. Now if the promoter doesn't want to sell 73% of the stocks, they are holding 73% with themselves, then float will be 27%. Trading will happen in these stocks only, not in others, these 27% only. Now Hindenburg alleges that Adani is manipulating the entire stock holding pattern. Plus, they are creating a series of shell companies that are buying Adani stocks and maintaining a very small proportion of the float, and this way they are able to pump up the stocks. So now let me summarize the whole thing. So 75% of the Adani Enterprise, for example, I am hypothetically saying to explain the numbers, 75% of the Adani Enterprise stocks are held by promoters, plus this 15% of this will be held by this shell companies. So 75 plus 15 will become 90. So 90% of the stocks are held by promoters and their allies, which is not a good sign. Now Monarch Network Capital, this company was handpicked to book run the Adani Green Energy share. Book running means getting the stocks in the listed market or doing FPO. But this company, Monarch Network Capital itself, is mired with lot of problems. You can check on Google just by typing Monarch Network Capital Adani Green Energy share. Orders have been released by SEBI to look into this matter. So all this shady stuff is happening. Coming to allegation number 2, Adanis are working with Ketan Parekh in order to pump up their stock. If you don't remember Ketan Parekh used to pump up the stocks in the Indian stock market. Few years back he was banned to trade in the Indian stock market. So he went to London and now continued to operate from there in a clandestine manner. In fact, Sucheta Dalal also tweeted on this matter in context of working together of Adanis and Ketan Parekh. Now coming to next important points, which is related to auditors. It has been alleged in their report that their auditors are also not clean. For example, the independent auditors of Adani Enterprise and Adani Total Gases, a tiny firm called as Shah Dhandaria and Company. And these are the people who are freshly minted CAs and they ended up auditing these companies. See, I am not leveling any personal allegation. But it looks very shady that some inexperienced people would go and start auditing these high powered companies which have billions of dollars of valuation in the stock market. Also, the size of the company is very small, so it does not reflect well on such big conglomerate hiring small auditors to do independent audits of the company. So comes the final point. What can be drawn from such inferences and data present on the report? I have only touched the surface. If you want, you can go and read the whole report. I have encapsulated all the major points. But in summary, these are the few key things that I will say. First, point number one is that Adani stocks are hyperinflated. Second key point that you should know is Indian mutual fund houses have generally avoided Adani stocks, barring LIC. LIC has poured in a lot of money in Adani stocks, God knows why. Point number three is Hindenburg has levied its allegations. Adani will give some kind of counter arguments. Now the good thing in the Hindenburg report is that they created a series of 88 questions that they want Adani to answer. If Adani can come up with a good response and answer those questions, then all will be like well and good. This discussion will be squashed. End of the discussion. But if Adani choose not to answer these 88 questions, then it might be a slight issue. So now we will have to wait and watch and look at their response. Now comes the final point that if you are an investor in the Indian stock market, how does the future look like? What happens if the Adanis will default on their debt? That we will discuss in some another video, but the future does not look good. But if there is a massive collapse of Adani, it will take a lot of companies with it. It will create a massive distrust in the market, and these type of things take years to recover. Thank you so much for watching. Do share your comments and views, and I will see you next time.